Hello, hello, hello. Well, it's time for WealthE Wednesday, the second session on the same day. As I said at lunchtime, it's my favorite day of the whole month because we get to share, we get to help people, get belief and inspiration, knowledge, but most importantly, we get to help people invest, which is just awesome. I must admit, for me, tonight is an awesome series as well because we get to share something of real value. So, what is the focus tonight, and what are we going to be running through? Well, Lee said to me, Scott, what should we focus on this month? And I thought to myself, it's really interesting because we're in these really trying times, and generally when it comes to bloggers and influencers and all the opinion makers, they've all got an opinion. But when the world really, when the SH1T really hits the fan, and whether I'm allowed to say that or not, I apologize. Everyone really reaches out to the truly successful people who've been there, done that, people that are in their 70s and have seen many of these type of economic ups and downs, crises, call it whatever you like. And what I find fascinating is that there's been a huge amount of talk. You can go and see a lot of press around Ray Dalio and Jim Rogers. And so I said to Lee, well, why don't we study what they're talking about and what they're suggesting that people do in these times? And then, we can, because they always say, if you want to be successful, copy successful people. And I must admit, while I was studying and preparing for this, I also, thought that you're probably going to get a bonus tonight. And there's one extra person that I think should be added to that list. And so to see whether you are knowing what is going on, and while I welcome my fellow guests to this panel, who do you think the third authority should be on money, the economy, investing, global markets, and the impact of Corona? Also a US dollar billionaire, and who do you think it might be? So anyway, welcome. While people are typing that up, you should have the chat box. Welcome to Lee Rush, who's head of our community, and David and Alex, that are both our wealth consultants, who are joining us live tonight to be sharing with you and adding as much value as possible. We are going to try and make tonight as interactive as possible. So I'm going to be sharing with you some lessons, but I would love you to be putting in your comments, asking questions, engaging. And that is equally the same for Lee and for Alex and for David. I always say you're the voice of the investors, so let them know. But anyway, welcome to the three of you. Wonderful to have you online.
Thanks so much, Scott. Hello, everybody online. Welcome to our second WealthE Wednesday session. We are looking forward to sharing with you. As Scott said, please fill in who you think our third billionaire is going to be. We've got one that's come through from Nigel saying Mike Maloney. Janet thinks it's JT Fox. We've got Richard Branson coming in. These are all really good suggestions, guys. I'm going to be monitoring the question box, so if you have any questions along the way with anything that Scott shares, please just pop them in there. I'll either answer you directly offline, or we can ask Scott on air and get him to answer those. But please feel free to interact as much as possible. We get a lot of value out of our community interacting back with us, so we look forward to a really powerful session.
Yeah, I must admit, just before David and Alex say, how's it? Last month, the WealthE Wednesday, this one at nighttime, the theory one was so much fun. I really, really enjoyed it. And it's because we engaged so much. And that involves you engaging as much as us. So I can see only 4 people have given their opinion. Please understand, you can't get this wrong. I've literally given you 2 billionaires, world billionaires. And I'm saying who should be the third opinion. And I'm interested in your opinion. You can't get it right or wrong. Alex and Fritz, nice to have you online.
Thanks, Scott. So so hi guys, welcome online to all our online viewers this evening. Scott, my guess would be what's the gentleman's name? Warren Buffett. That's the guy that I would recommend.
Interesting. Let's. I'm not going to say yes or no. Let's keep the names coming. I'm always fascinated to see who people think we should be respecting and following anyway. So I can see a number more names coming through. And David, welcome all the way from China.
Yes, hi, thanks, Scott. I was thinking it's definitely not one of the Kim Kardashians that we're talking about, because I don't know if they can offer some investment advice. But unfortunately, also Fritz isn't on the call tonight. He's taking a bit of a rest up.
Fair enough. Well, we've got some great names coming through, and nice to have a multicultural webinar with people on different continents. So We've got, as Lee said, we've got Mike Maloney. We've got JT Fox. I know JT personally. He's definitely not a US dollar billionaire. Richard Branson, Robert Kiyosaki, Tony Robbins, Warren Buffett, Robert Kiyosaki, Bezos, Bloomberg, Elon Musk. RD is not already on your agenda soon. RD, who would RD be? Larry Ellison. And so to all of those of you, and including Alex that said Warren Buffett, well done. I must admit, I thought that would be a bit easier than it turned out to be. And it's just interesting to see who the different people are that you believe that we should be following. There's some amazing people there, and I must admit, a lot of them I've got huge respect for. But when it comes to money and investing, the three sort of doyens, in my opinion, of certainly the last 30 or 40 years of investing, from the early 70s, would definitely be Ray Dalio, Jim Rogers, Warren Buffett would certainly be right up there in, the top 5 and certainly the world's top 10. So I just want to point out that we've got a sequence, and if you haven't picked up our rhythm, in the lunchtime session, we get practical. So we talk about how to do KYC, how to onboard, how to invest in the, fund your wallets. We talk about the different deals, and we go through each and every one of the deals. So it's a completely practical session. We actually have breakaway Zoom rooms where you can go and talk with the wealth consultants. But I think what's important is that it's all about the practicality. So if you missed that this afternoon, you're very welcome to, get the recording, and/or you can, join us next month, because every month at lunchtime, that'll be the idea. Practicality. It's like an online showroom where you can come in, talk to the team, find out about the platform, find out about how to get set up and everything else, and to be able to actually invest in deals. But what we're going to do now is we're going to pivot into the nighttime session, and the nighttime session is always around theory, practical. It's some of the taking the theoretical stuff and how do we practically use it, but not necessarily about the deals or the platform. And as I said, the team are here should you have any questions about that. Jim Records has just come up as well, which is also interesting. So some of you have seen this information before. I love this slide, and I've used it for probably nearly 20 years. The right information at the right time is 9/10 of any battle. Just by the way, I used this quote in my dissertation in 1998, which was on how technology was going to disrupt the construction and property industry, which feels like a hell of a long time ago now. And these are the type of things that we're seeing all over the place. What's happening with global equities, shutdown. But what I wanted to do was to give you some updated slides. Some of you, we've had quite a few slides, or not slides, but we've had quite a few webinars over the last couple of weeks. And the purpose of WealthE Wednesday is to bring it all together and to try and add you as much value. So the one that I would highly recommend, and I will put all of these links into the chat box, and also Lee, we should find a way. Maybe what I'll do is I'll put them on the Word doc, and I'll share them on the Inner Circle group. So for our Inner Circle, I'll share all the links so that people actually have the links, because I think there's a lot of very valuable articles, and for our Inner Circle, I want to be able to add value to them. So this was an article by Magnus Heystek. I actually spoke about this last month. I'm just referring to it again because it's very interesting about the middle class being wiped out, investing in the stock market, property, funds or REITs, et cetera. So this is a very good article, although a very sobering article. This article is very interesting because it talks about what WhatsApp, Dropbox, and Kickstarter have in common, and that times of crisis breed innovation and invention. And I found this really interesting. If you look at any good company, a good idea is a good idea no matter what the climate. An entrepreneur's grit, tenacity, make things happen even in a crisis. And when the right crowd supports a project, anything is possible. So while the wall is in free fall, an entrepreneur and those who backed him were getting on with business. And they spoke about how Uber, Airbnb, Pinterest, Dropbox, Slack, Kickstarter, Stripe, Lending Club, AngelList, even VC and Andrew Horson were created in the last crash. What I also love here down the bottom is that it talks about a big move towards, where's it gone now? Collaborative consumption. So here it is, collaborative consumption. And so in the last crash, we moved to collaborative consumption. In this crash, I believe, and I'm not going to go into it tonight because I've done enough webinars of it already, but I think that this is creating enough pain that we're now going to move to collaborative investing. So we've got e-commerce, we've got social media, the two are coming together. They create social commerce, and obviously we started with collaborative consumption, and now we're moving into collaborative investing, and it's only a matter of time, and this is really creating the pain to make it happen. So, you know, what this whole article is about is that actually using these times in terms of where the world is going, and that future-focused investors will back these opportunities, which I think is really important for what we're going to talk about tonight. And the other thing that's really important is about purpose. Funny enough, you spoke about the Kardashians, but it was actually about purpose-driven companies. Where's it gone now? Here we are. See more purpose-driven businesses emerging. So just interesting. So let's go back to the economy. And I wanted to show you some articles because there's some very good articles that are out there. So I've got quite a few articles I wanted to share with you. And this is, I'll come back to that one actually. So let me start here. So these are some articles that I got from Roger Hamilton actually. So I was on a webinar with Roger Hamilton. So 31% of people in America cannot pay rent in the last month in April. And if you look here in CNN, 22 million Americans have filed for unemployment benefits in the last 4 weeks. Coronavirus, 1/3 of Americans missed their rent payment. 85% of retail landlords have not paid their rent in April. So everyone who always said that residential was, you know, worse than commercial for getting paid. It's a bit of a wake-up call. This one is interesting. Home lenders brace for up to 15 million mortgage defaults. The UN says that we could be up to 197 million job losses. Sorry, this takes a little bit long. The UK economy could shrink by 35% with 2 million more people unemployed. This one's really interesting. Trapped UK property fund investors charge £10 a month. So there's a whole bunch of retail investors that are trapped in UK property funds where they can't get out, there's no liquidity, and yet they're still getting charged. This is a brilliant article by the Financial Times. I'm actually a subscriber to them, all around where they see the world going in terms of property in the UK and all the different markets. So the outlook for first-time buyers, investors, etc. They actually see the outlook for second-time steppers, little change. So that's people moving into, you know, second homes, etc. But the outlook for landlords, nervous, likely lower returns. So really interesting. You know, the old traditional buy-to-let is really, you know, taking strain. By the way, one of my properties in London, which I've spoken about so many times, I've never had a void in 18 years, never, not once. And this month is the first month that we've got a void. And I spoke to my tenants last night and I said, guys, what is going on? I mean, we've never had a problem in 18 years. And they said there's 300 properties available in Wimbledon this month because everyone's left to go out to the counties. Okay, unemployment in the US and UK may be worse than the Great Depression. UK house prices decline as market remains volatile. This is a really interesting article about the Guardian and everything that's happening, you know, in the UK property market. Unemployment at 10%, 1.4 million Aussies out of work. So I think you're sort of getting the point that it doesn't really matter which part of the market you look at or who you go and talk to. We're in some interesting times. And so for me, this is such a simple graph, and I always like to bring this graph up over and over again, is that, so Shedden's saying it's breaking up very badly. Can you just confirm for me, Lee, if it's breaking up very badly for you as well?
It's breaking up intermittently, Scott. Maybe you want to try without your earphones in. Seeming the rest of us are muted at the moment. Let's see if that works.
Let me know now. Can you hear me now?
Much better.
That's good.
Okay, please just shout if there's problems with the voice, because I will phone in if I have to, and I will throw my laptop into the sea because it's dying. So anyway, what I was trying to say is that this graph is a very simple graph. It's actually, you won't believe it, but I created this graph in the early 2000s when I bought my first property in London in 2002, because we were going through a crash after September the 11th, and everyone, not a huge crash, but there was a crash with that and the dot-com boom bust. And I was trying to show people how they always focus on the crash, which is the right-hand side, versus the left-hand side. And these are all the articles that I've shared with you. But what I wanted to do was to get into the 3 billionaires that I believe, that I personally follow the most and respect the most. And one of the reasons I like about them is that they call it as it is. You know, they literally, whether it's good or bad, it doesn't matter, they pretty much tell you. And so the first is Jim Rogers, and he wrote a book called Investment Biker. And why I'm starting with him is because he's more macro, big picture. And I was very privileged in 2014, I got to meet him. So my uncle actually started the Botswana Stock Exchange. Most of you probably didn't know that. And in 1987, Jim Rogers basically retired at the age of 37. He was a business partner with George Bezos. That's Jeff Bezos. George, I'll get it just now for you. And as a billionaire at the age of 37, he retired and he jumped on a motorcycle and he rode around the world. And he actually holds the World Guinness Book of Records for the longest journey on one single motorcycle. And his whole logic was he wanted to go and find new trends, find new opportunities. He went all over China, all over Southeast Asia, right up through Africa. And he said at the time he would never invest anywhere in Africa. And then he got to Botswana and he was so impressed by the little country of Botswana. And my uncle had just opened the stock exchange and he had 12 stocks. And his entire trip through Africa, he didn't buy a single thing in Africa except for all 12 stocks on the Botswana Stock Exchange. And to this day, my uncle and Jim have remained friends. And so when I was going to Singapore in 2014 for the, what was it now? It was the first crowdfunding property event in Asia, actually, and it was in Singapore, and I was invited as a speaker. My uncle put me in contact with Jim Rogers, and I was very privileged on 2 different trips to have 2 individual lunches with him. And this is actually a picture of me and him. I'm holding his book and he's holding my book, and he's pointing to where we should be focusing on in the world. And I'm going to talk about that tonight in terms of where the world is going, because he said something to me that really shocked me that day. You know, he said so much valuable stuff, and he spoke about one trend. And I said to him, what would you do if you were, I mean, this was 6 years ago, so I would have been 37 years old. And he said, if I was 37 years old, you know, again, if you were 37 years old, would you move to Hong Kong, or would you move to China because that's where the future is, or would you stay in Africa because that's where the future is, or would you move to America? And he basically said to me, he said, Scott, the 19th century, so the 1800s, was all about the British Empire, and it was about rifles and Roynecks, or not Roynecks, but what are they called? Redcoats. Sorry, not Roynecks, that's the wrong one. Redcoats, and rifles and redcoats. And you know, the whole century was pretty much dominated by British colonialism. The 20th century, so the 1900s, was the American century, and it was literally dominated by bombs and bullets. And if you look at it, you know, America tried to colonize, you know, the world, and we had the Cold War and everything else, but it was all about military battles. And now, in the 21st century, it's so interesting because the 21st century is all about China. And what's interesting is that they're doing it very differently. They're doing it through money, and more recently, they've been doing it through masks. And what I mean by that is that, you know, when I met Jim Rogers in 2014, it started to really dawn on me after what he said. You know, I went to Mauritius, and the Mauritian airport was built by the Chinese. And then I went to Harare and Vic Falls in Zimbabwe, and the airports were built by the Chinese. And I haven't been to Mozambique, but I've heard that the highways have been, you know, built by the Chinese, and it's happened all over Africa. And what's really interesting is that more recently with the coronavirus is that there's been huge talk now. Where the article's gone? Are these them? Sorry, I can never remember exactly which is the article. Yeah, here we are. Chinese billionaire Jack Ma to donate test kit masks to every African state. He's to 54 African states and 500,000 test kits. And the other article here was China expands medical aid to Africa. Well, what's so interesting is it was happening a long time before then. And it's not just about the medical thing, because my son is at a school here in Knysna in South Africa. And when he was 3 years old, we had to go for like one of those interviews where the parents are being interviewed to see if they'll let the kid into the private school. And, you know, I asked the question the other way around. I said, well, do you have Mandarin? And they said, yes. And I was actually very impressed. And I said, how do you do that? And they said, no, well, the Chinese embassy actually pays for a teacher to come down as long as we pay for board and lodging. And I thought that was incredible. And I went back to my uncle, and my uncle's very wise. And as I said to you, he was Jim Rogers' friend. And I told him the story, and he said, yep, that's the new colonization, because they're giving away Mandarin for free. So people all over the world are learning Mandarin. And so, as I joke, the 21st century is all about money and masks. And I remember walking outside of Jim Rogers' house, and actually it's got a beautiful big house in Singapore. And I remember sitting on the verge while I was waiting for a taxi, and just, you know, your mind is just absolutely racing because you've been given so much interesting information. And one of the things that he said was that he so believes in the future of China that he actually moved in his late 60s to the east from America, from New York. And what was so interesting is that he only had daughters when he was 60 years old. So he's got two daughters now that are 12 and 14, but he had them when he was 60. He's in his 70s now. And he chose to live in Singapore. And the only reason he chose to live in Singapore was because of air pollution. So he wanted his daughters to learn Mandarin. He wanted them to grow up in Chinese culture, but he didn't want them to grow up in the pollution of Shanghai or Beijing and or Hong Kong. And so he chose Singapore, which is just really, really interesting in terms of where the world is going. So the first thing that you can learn is from this guy, Jim Rogers. And I wanted to share two things with you about Jim Rogers. I think they are here. No, it's this one here. So this was an article about Jim Rogers, which just came out in the Financial Times. And I'm hoping that these webinars, you enjoy them, because we go out and I try and find you the information so that you can bring it all into one place. But in simple terms, he traveled around the world on a bike. He then did it again in a Mercedes-Benz. He says at the age of 77 that he's hating living in one place and wants to get out. He made his fortune in the quantum hedge fund with George Soros. Sorry, I knew it was George, not George Bezos, George Soros. Retired at 37 and went off around the world on a bike. And like I said, that book, Investment Bike, is highly worth reading. What I wanted to show you here quickly is that he's a commentator and speaks all the time on all the different types of things. But he said, yeah, even before coronavirus had erupted, the US equities market was due a corruption following an 11-year bull. So another thing he said, and I'm talking when he said when I was having lunch with him, is he said that, Scott, every single year, and it has done since the beginning of history, 8 to 10 years, there's a correction in the market. And if you look, every 8 to 10 years, there's been a correction. And, you know, one of the things that he and so many other people were saying, once we got to 2018 and even 2019, was like, we are well overdue a correction. And the one thing that Corona did, we were just a balloon that was waiting for a pinprick. Corona was just a pinprick. And you know, he's not the only one, so many people. Financial markets were very expensive prior to the outbreak. It was absurd what was happening. He questions the rebound of stocks, you know, based on just emergency support from the government. You know, it's a lot of people talking, and I'm going to show you stuff tonight, but, you know, you need to be very careful that just because you can buy a cheap share doesn't mean it's coming back. You know, you can buy cheap Steinhoff shares now still, and it doesn't mean you're getting a discount. And he's been buying into Russia and China. Their depressed equity markets have presented some attractive opportunities. So he's always been very big on emerging markets, specifically China. Commodities. So one of the big things about him is that he's always believed commodities. He's always really focused on commodities, and he believes that commodities are the cheapest assets in the world right now. Agricultural commodities, recent fall in oil, and he's spoken about what's happening in oil. So again, you can go and get this article on the Financial Times. And Lee, I think if everyone's nice enough to us, if they're on the inner circle, and maybe they just want to type in their inner circle, I will print this article or figure out a way to PDF it and I'll post it on the inner circle so that people can get access to it. He believes
Awesome.
in gold. Yeah, only for our inner circle people, because they are paying for us to add value to them. There's far too much debt. In fact, there's more debt now than in 2007, and the debt is now higher than the Second World War. It is inconceivable how the central banks could do what they've done. Debt has skyrocketed everywhere, and it's about our children. So another thing he said to me is, he said, listen, Scott, there's a very good chance we'll get through the next crash. Now, this was in 2014. I want to put in perspective. So I met him in 2014 and again in 2015. And he said, there's a very good chance we'll get through the next crash, because what happened in the first crash was that the banks got themselves into trouble, and then the governments took over the debt. And he said, what will happen in the next crash, and I find this horribly uncanny, but he said what happens in the next crash is that the governments will take on all the debt and they will get into trouble. Right now, that's what he was talking about. And he says the next crash, which is 8 to 10 years from now, will actually be bigger than this crash, and that's where it'll all fall apart. So I'm just telling you what he told me face to face. It'll be interesting to see what happens. He said concerns over the future of young people, and I think there was one last thing I wanted to show you. He was talking about Korea. So he's always been one of those people, he was in China long before anyone else was in China. He's talking about how North Korea is opening up, and how there can be, opportunity in that in China. In Korea, North Korea. So that's an article I would highly recommend. And the other article I would highly recommend is actually just his quotes. So those who cannot adjust to the change will be swept aside by it. Those who recognize change and react accordingly will benefit. I mean, very, very opportune for what we're going through right now. Acknowledge the complexity of the world and resist the impression that you can easily understand it. People are too quick to accept conventional wisdom because it sounds basically true, and it tends to be reinforced by their peers and opinion leaders, many of whom have never looked at whether the facts support the received wisdom. It is a basic fact of life that many things everybody knows turn out to be wrong. So whether you like it or not, one of the things I teach my son is that rules are for other people. And most people don't like me saying that, but it's the truth, because who says the rules are right? A poem I wrote years ago was, who says the rules are right? If we believed the people that said the rules are right, we would never have flown an airplane, we would never have gone to the moon, the world would be flat, women and Africans would never have voted. Who says the rules or the laws are right? At the end of the day, we've got to follow nature's laws, and only then will we find our destiny. And it's so interesting when I say that to my son, and we're riding along today at 9 a.m. and there's a policeman fining people because they haven't got home by 9 o'clock. And my son's response at the age of 8 was, look, that man's job is to enforce silly rules. Never act upon wishful thinking, act without checking the facts, and the chances are that you'll be swept away along with the mob. So I think that's amazing, and I want to, applaud all of you online tonight, because you're not just going with the mob and wishful thinking, you're getting facts. And not one country in existence today has had the same borders and government for as long as 200 years. The world will continue changing. And this is one lead that I'm going to finish off with. If anybody laughs at your idea, view it as a sign of potential success. So we've spoken about collaborative investing for a long time. We've spoken about people investing online for a long time, and just interesting. Anyway, let's pivot away from Jim Rogers. I now want to pivot to the next two. And some of you have seen this slide before, and it really came from Tony Robbins. So in the last crash 10 years ago, the Tony Robbins went out and he found 50 of the wealthiest people. Oh, actually, hang on. I've forgotten something. Before I pivot to Tony Robbins, I want to go back one slide because I want to share with you a video. So this is a video, which is an hour-long video about China and what is happening in the East. I will put the link to this video in the chat group, and if you're watching the recording down below, I would highly recommend watching the whole video. But this is a 4 to 5 minute video on China and the future of money. And trust me, coronavirus is just accelerating this. It is not a trend slowing down, it is a trend which is accelerating. So let me get this video up for you. because we are talking about long-term trends and where the world is going. And as you know, so many people say, most people play to where, there's that great saying from the ice hockey player, where I just forgotten his name, Wayne Gretzky, and he says good players play to where the puck is, and great players play to where it's going. And what I'm trying to share with you tonight is not what's going to happen in the next 2-3 months, because it's irrelevant. I'm going to try to share with you where the world's going in the next 5 to 10 years. Let's watch this video.
Scoot right in. All we did, we set this guy down. I'm going to show my face. Not proud of that picture, but it'll work. I'm going to scan this QR code with my WeChat app. And simple as that.
No employees.
No employees. Took just a few, probably faster checkout than if we had employees. Here's your Coke, by the way.
Okay, thank you.
So that's the future, right here in China.
So one of the things that I think is really transforming people's lives is how people use WeChat in China. So for example, when people decide to meet some friends for dinner, they typically would invite them via WeChat because they're obviously in their contacts. Then they would send, the reservation would happen through WeChat because the restaurant they want to go to is a contact as well, and they have their booking system integrated in WeChat. So then they show up at the restaurant at the same time. The ordering, actually the menu of the restaurant will be embedded in WeChat, and they online order. So there will be no waiter taking orders, but everybody orders on their mobile phone. In the end, the check also gets sent to the mobile phone, and people actually can choose to pay with their integrated TenPay option. So the waiter only brings the food, and everything else automatically gets done through the WeChat app.
These technologies have even changed the way people buy cars. Get this, you can now reserve a test car on your phone, then pick it up at what is essentially a giant vending machine for new cars by BMW, Ford, and Volvo, and then drive it around all you want, test it for the next 3 days for less than $50. The thing you need to understand is that it's not just about making payments on your phone or getting rid of physical cash. This development creates hundreds and hundreds of new business ideas. This is the future for us in America, but it's all unfolding right now in real time here in China. Kevin Liu studied at Cornell University. Today, he's an equity strategist at CICC, the largest investment bank in China. Kevin is part of what is widely considered to be the best equity research team in the country, and we met up in Beijing.
Back to 2006, it's roughly just over something like 1% in China with regards to like mobile penetration.
In 2006, 1% of Chinese people had mobile internet. Today, it's at least 50%.
At least.
At least, yes.
At least. My life is kind of, tied, very closely tied with my phone.
Today, the amount of money the Chinese spend on e-commerce is 42% of the world's total. That means the value of China's e-commerce transactions is now larger than the value of the e-commerce transactions from France, Germany, the UK, and the US combined. This is why the money is flowing to China, and why more millionaires are being created here than anywhere else in the world. Everyone, everywhere, uses their mobile phone to pay for everything. Food, train tickets, plane tickets, tolls, clothing, fast food, everything with their mobile phone. In fact, on our most recent trip, we tried to spend a few $100s buying souvenirs in a Shanghai bookstore, but they no longer accepted credit cards.
What we often look at is what is the size of the potential user group we have. And for example, the number of internet users in China is rapidly approaching 1 billion. And those are numbers that even for a huge market like the US, they dwarf the very impressive numbers of the US. And I think that in time, as these populations become connected, wealthier, presents a fantastic investment opportunity.
Things have changed so fast in China over the last 30 years from nothing, from a very backwards country. Now people are living lives that a lot of people, even in the US, couldn't even imagine.
Okay, so from a cashless society to unmanned stores and waiterless restaurants to mobile commerce beyond our imagination, clearly this is not how most Americans perceive China. And these are not stories you typically see reported in the mainstream press. However, this is the reality in China today. But hold on, you might be saying to yourself, I thought this was a communist country. This doesn't sound like communism to me. Well, as Jim Rogers said earlier, California and Massachusetts are probably more communist than China. And the truth is, while the Chinese call themselves communists, they are actually among the best capitalists on earth. And this is part of what's caused such a radical distortion between perception and reality in China today.
China isn't a communist country anymore. It's not a Marxist communist regime like it was under Mao Zedong. It has advanced much more into what you might call a form of autocratic capitalism. It's still a dictatorship, it's still an autocracy, it's not a true democracy by any means, but think about it, most of the economy is now run by private sector interests, by private companies who are doing their own thing, investing, doing what they want to do. Families can pretty much live where they choose these days. They can get educated the way they want. They can own their own home. They can invest in stock markets, invest in all sorts of products. Still a lot of restrictions, nowhere near as free as it is in the West perhaps, but it's certainly not a communist country in the way that Marxism says that all resources must be owned by the state. That is not the case in China anymore.
I mean, this is a country where since 1978, 1980, when Deng Xiaoping started the open door policy, a country where GDP growth has skyrocketed, where life expectancy has skyrocketed, where quality of life skyrocketed. Everything has gone up, up, up. This is an economic miracle. You know, those are measurable facts in a communist country brought about by capitalism.
It's almost ridiculous to call China a communism country because the government is the biggest capitalist in the world.
I never look at China as a communist nation. I don't even ever use the word. China is very capitalistic. Okay, there's a middle class forming there. You have hope. I go back to the word hope. That you can be low income and become a billionaire.
The truth.
So I hope you enjoyed that, and let me get my slides back up. So some very, very interesting. I should have my slides back up. Yep, I've got them. So there's the link to the video. I have put it in your chat box. New Money, the greatest wealth creation event. And as they said, there's more millionaires and billionaires in China now than anywhere else in the world. And it's so interesting that 10 years ago, or 2006 to 2016, they went from 1% mobile connectivity to 50% mobile and internet connectivity. You know, this is the world. This is when I talk about online consumption, it's collaborative consumption. It's already happened in China. And now we go to the next phase, which is collaborative investing. And that's why I wanted to talk about Jim Rogers, because I had the privilege of him giving me insight into these future trends. And so it's not just about being in the right sectors, but it's also about being in the right geographies and the right populations. And one of the things that's so important is looking for rising middle class. You know, if you look at what's happened in China, there are about 400 million people that are in the middle class in China now. There are about 800 million people that are on WeChat. I mean, the total population, I think, is 1.3 billion. And that has had this massive change around the world as the Chinese economy has gone from nowhere to the second biggest economy in the world and is about to become the biggest economy, certainly in the next 5 years in the world. And what's really interesting is that if you start future-proofing yourself and you say, well, where else is this happening? Where else are we having middle-class growth? Because they all have the same needs. They all want health. They all want access to education. They all want access to wealth, all the things that middle-class people want. And it's happening in Southeast Asia. It's happening in India. It's coming to Africa. And it's only going to happen faster. And ironically, again, COVID is going to increase the adoption of technology, not decrease it. Okay, let me go back to where I was. So Tony Robbins came out with this book 10 years ago, and he interviewed 50 of the wealthiest people. And the first one that he interviewed was Warren Buffett. And as I said, when I wrote up the description for this webinar, I didn't include Warren Buffett. But actually, when I was doing this, I thought I really should. So his thing is don't lose money. And, I'm going to talk about that a little bit later. The second thing is asymmetric risk reward. The third is tax efficiency. And the fourth actually came from a guy called Ray Dalio, and the book is Principles. I would highly recommend reading this book. I've read hundreds of books, And this would certainly be in my top 5 books I've ever read in my life, Principles. So I'd highly recommend it. And he talks about diversification across assets, within assets, across markets and currencies, and across time. So let's go into this a bit deeper. So Warren Buffett says rule number 1, never lose money. Rule number 2, don't forget rule number 1. And so what's really interesting at the moment with Warren Buffett is that if you look at the articles on Warren Buffett, there's an article that's come out. Where's it gone? No, I've lost it. No, here it is. You can see I've got lots of articles open to share with you. So Warren Buffett is not making any deals, and should we be worried? 4th of May, so 2 days ago. And this actually talks about how, Warren Buffett's one of those people that's always spoken, when there's blood on the street, take action. When people are fearful, be greedy, and when they're greedy, be fearful. They're all Warren Buffett sayings. And he actually just did his Berkshire Hathaway talk. And what was so interesting is that he's not investing in anything at the moment. He's sold his big stake in 4 airlines, and he's basically piling cash, because what he's saying is that America long term will be fine, but that there's, this coronavirus could have a big impact, and certainly have a very large impact on the stock markets and what's actually happening in the stock market. So what's fascinating in perspective was in 2008, he ran in fact, he actually propped up a lot of the banks himself, gave them debt, etc. And yet at the moment, he says this time he's husbanding his capital, as in he's looking after his capital. Our position will be to stay like Fort Knox, so basically to protect. So really interesting that they're not looking to buy deals on the stock market, because he doesn't believe that it's going to necessarily recover quickly. I don't know, how long it's going to take for airlines, energy, real estate, and retail industries have all taken a knock. When he talks about real estate, he's talking about specific sectors which you need to be very careful in. If you own a shopping center, you've got a bunch of tenants that don't want to pay you right now, and the supply and demand for retail space might change fairly significantly. So I completely agree with this. If you've been watching me do talks, I've been talking about how shopping centers in America have been going bankrupt, and more recently in England have been going bankrupt. And it had nothing to do with coronavirus. They're going bankrupt anyway because of e-commerce, and coronavirus is just putting a death knell into them. And so, whether it's real estate or even the stock market, you better make sure that you are future-proofing yourself in terms of where the world is going. And so that was everything around Warren Buffett. What is interesting is that we did a great webinar last night, and Justin Clark actually mentioned a quote by Warren Buffett, whereas you want to invest in something valuable in 10 years. So I actually found a quote of his, and he said, if you're not prepared to invest in a stock and hold it for 10 years, then don't spend 10 minutes analyzing it. And I just thought that was really interesting, because in the same breath as all the negative news that I've been talking about, if you look here, we've been investing in medical buildings for 6 years now. And sorry, wrong article. Where's my article gone? It's the problem with having little tabs. I can't tell you exactly which is the article. So new reports suggest that medical properties may be immune to COVID-19, and commercial real estate, it talks about, you've got some really big players here talking about it, and about the supply and the demand, and how there's a real need for it. CBRE said that the vacancies are at the lowest level ever in terms of the market and the opportunity. And as I said to you, we did a webinar last night that I would highly recommend if you want to understand medical better, where our partners on the ground have 126 medical tenants, and less than 4% of them, less than 5% of them, it's about 4% of them, are not actually paying at the moment. And what's interesting is that it's because they're like dentists. So if you need a dentist, even when Corona's finished, you're still going to need a dentist. It's just the legal system that's not allowing the dentist to be open, same in South Africa, and chiropractors and physios. If you own a restaurant, there's a good chance you might be out of business by the time the COVID thing, goes on. So medical office building poised for quick recovery. So, in any market, you need to be very careful, that you're looking for sectors that are going to have long-term future proofing. And I loved what Warren Buffett said. And I'm not going to talk a lot about medical tonight because we did that last night on the webinar. But I love what Warren Buffett said: invest in something that's going to be valuable for 10 years. Well, I think we can safely say that medical buildings are going to be, good investments in 10 years. And the reason being is that you've got an aging population in America. More and more people are needing medical. Doctors are not going anywhere. They don't leave their premises. The licenses stay with the premises, and they make very good long-term tenants. In fact, Justin told a story last night of a medical building that he was part of developing in 26 years ago, and he went back recently, and the tenants were all still the same from the very first tenants that moved in 26 years ago. The third person I want to talk about is Ray Dalio, and he's really got two principles I want to share with you. The first one is asymmetric risk reward. And so what most people think is that they go out there and that they look for the most, that whole saying of the higher the risk, the higher the reward. And that's what we've all been taught. We were taught at school, we were taught at university, and we indoctrinated with it by the financial industry. And yet the wealthiest people actually look for high reward and low risk, asymmetric risk reward. And we've actually got a risk ratings that is on our platform. So as an example, one of our medical buildings that we launched just last night on the platform has a FTSE client, so a New York Stock Exchange client. They've got 133 hospitals in 37 states around America. They are the tenants, so you don't get more blue chip than that. It's in the medical space. It's a hospital within Texas. Texas is one of the primary states in America with the highest growth rates, highest population increases, huge economy. People ask us about, whether oil is going to have impact. Texas is so diversified beyond oil that oil is irrelevant to Texas. And I look at that and I go, well, that is a very long-term, low-risk, high-return investment, because if you're getting north of 8% cash on cash in today's market, it's probably safer and better than putting your money in the bank. And so there's a classic example of asymmetric risk reward. Aged care in England, exactly the same thing. You're getting high cash returns in a specialized acute market. And we'll talk about that a little bit later. He talks about the importance of tax efficiency, which I think is fairly self-explanatory, and the massive difference it makes to you if you don't have tax efficiency. But the one that I like most about Ray Dalio is diversification. And I said it already, but it's diversify across asset classes, within asset classes, across markets and currencies, and across time. I'd actually add one extra one to that, and that's across partners as well, because if you've got all your money tied up with Lehman Brothers, no matter how good Lehman Brothers looked in 2008, by the end of 2008, you would have lost all your money. And so no company in the world is bulletproof. And, I would highly recommend diversifying across, assets, within assets, across markets and currencies, and across time, and across partners. So what's so interesting is that he made a comment in this book, Principles, that the only thing you have to do to be wealthy is you need 15 uncorrelated bets in an attractive array of assets that don't move in tandem, reduce the risk by 80%, and the risk-return ratio increases by a factor of 5. So I wonder if you know what it is that he's talking about. And if you don't, there's a great TED Talk that came out in the last month where they interviewed Ray Dalio on coronavirus and what he recommends you should be doing in the market. So again, it's about a 3-minute clip. Again, it's an hour-long interview, but I've taken the 3 minutes, which I believe are the most important of that clip. Enjoy.
But that's very different from the passive investment market, which is such a huge part of it now. And that's where most people, the average person has their money. And I know that everything's changing day to day, but I also know that everyone's going to have this question on their mind. So I'm going to ask you, I'm not going to ask for specific investment advice, but everyone's thinking about their 401ks. Do you have any general thoughts about how people should approach this time period with that kind of money?
Yeah. First of all, an investor must understand that they probably will not be able to play the game well. They probably will not be able to decide how to move in and out of things. In order to be successful in the markets is more difficult than getting a gold medal in the Olympics. You wouldn't think about competing in the Olympics, but everybody thinks they can compete in the markets. But there's more money competing. It's like a zero-sum game, and there's more money doing it. And the worst thing you could do is think you can time all of these movements. If you could, I guarantee you the game's a tough game to time. We put hundreds of millions of dollars into the game every year, and it's tough. So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way. The greatest mistake of all investors is to think that what has done well lately is a better investment rather than more expensive. And and what has done worse lately is the worst investment, get me out of it, rather than it's cheap. And unless you know how to deal with the differences of those, which most people don't, they're going to be in trouble. So understand that wealth, total amount of wealth in the world, essentially doesn't change very much, okay? And that one thing goes up, another thing goes down. And to know how to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Most people think, look, I just want safety, and those bonds aren't giving me an interest rate and so on, so where do I get safe? Cash is a seductive investment because it doesn't have as much volatility, but it taxes you in your buying power about 2% a year. And so, so cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Do you have a little bit of gold? Do you have a little bit of asset in case this monetary system breaks down and money's redefined? Do you have a little bit of that? I can't get into all the different ways that one can diversify well. I try to convey those things in my books or on posts on LinkedIn particularly. But I would say diversify well, be humble, don't market time, and be conscious of the dangers of cash.
Hope you enjoyed that little video, and I've shared with you the link to that whole video, which I would highly recommend watching. So it is a TED Talk, and you can see the link that is there. Just a quick question from Mike Addison. He said, the real question, will we get any advice on how to get cash out of South Africa with value? The exchange rate fell 100% almost overnight at the beginning of the sea panic and the junk bond status. I did, Mike, literally a month ago, the WealthE Wednesday in the evening, I literally did a webinar on the fundamentals, not the stock market, but the exchange rate, and how to do scenario planning and when you should invest based on whether the rand's going up or down, whether investments in asset classes are going up or down. And I think I answered your exact question. So Lee, if we could figure out a way to reach out to Mike and share with him the link to last month's evening WealthE Wednesday, I think it'll answer Mike with exactly what he's looking for. But to everyone else, this is not a South African focused webinar. This is a global focused webinar based on the 3 billionaires and what they're doing based on the global markets. Now, Ray Dalio has this complicated statement below, and many people find it incredibly complicated, and they immediately shut off and say, I've got no idea, and I don't trust myself, and I need to go pay a financial advisor a lot of fees. And actually, sorry, like most things in life, it's actually really simple, because he always uses the word bets. I prefer the word investments. But what he's basically saying is you need 15 uncorrelated investments. You need 15 investments that are not tied together in attractive assets that don't move in tandem. And that's all he's saying. You literally You need 15 quality investments in attractive assets that don't move in tandem. Okay, and if you do that, you'll reduce your risk by 80% and you'll increase your risk return ratio, so your asymmetric risk, by a factor of 5. So we've seen the video, and I'm not going to play the video again. And it's around 26 minutes. So the whole video is an hour, but around 26 minutes is where he talks about diversification. And it's his number one lesson for anyone in terms of the way to build wealth. And some of the things that he said is, diversify in assets, countries, and currencies. So interesting because I've just heard this over and over and over again from him. And yet most of us, we don't do it. We're stuck in one country. We're stuck in America. We have all our money in dollars. We're stuck in England. We have it all in pounds. We're stuck in South Africa. We have it all in rands. We're stuck in China. We have it all in the UN. And what's really interesting also is that in the current market, most people are trying to run to cash. And he says cash is almost always the worst investment. Think a little bit unconventionally, diversify well, be humble. To your point, Mike, around whether the rand has fallen or any other currency, don't market time. So don't try and figure out it's going to be better or worse tomorrow morning. Look for long-term trends and back those trends, and then be conscious of the dangers of cash. And so if you look at these principles and these concepts that the wealthiest people are giving us, some of the 3 wealthiest billionaires. And again, for all the people, if you've enjoyed all the different links that I found for you, and there are a few more in terms of, you saw one more that I was going to share with you there about the future of banking. And where's it gone now? No, that wasn't it. I'm going to be careful what I share with you. It was this one here. So we've got this one, the digital banking tipping point, and basically how everything that's happening. So I've spoken to you about this whole collaborative investing and how digital banking and how this again is the tipping point, et cetera, et cetera. So, that was the last article I wanted to share with you. And for me, what I wanted to share with you was that if you're part of the Inner Circle, I'll put it all on a Word document, and I will share that Word document on the Inner Circle groups. That's the whole idea of the Inner Circle groups, to consistently add value. To those of you who are not part of the Inner Circle, I highly recommend joining the Inner Circle. If you didn't, go back and watch the recording, and you can find all the links. So, if you take Ray Dalio, he says, make sure you diversify across countries, assets, and currencies. And there are other platforms out there. The digital landscape is changing, but would you want to, be stuck in one country? Would you want to be stuck in one asset class? Would you want to be stuck in one currency? And that's what they all offer. And we decided many years ago, when we launched in October 2013, to provide the global platform. And I'm so excited now because with our digital wallets, and we did a whole practical session this morning at lunchtime around the digital wallets, we are the first platform in the world in this space to have a digital wallet where you can send your money. It's protected by European law. You can invest around the world in diversified portfolios in multiple currencies, and yet you can manage it all in one place without having to worry about bank accounts, tax, and structures. Now, doing your KYC and everything in the beginning is a little bit of a pain in the ass. I'm doing it myself right now because our digital wallets only went live in the last month. And any KYC is a pain, but we are working with European regulation. Your money is protected by European regulation, and therefore there is red tape to get it set up. But once it's working, it's absolutely fantastic. And it truly makes what Ray Dalio has spoken about a reality, because you can now invest in England, America, Australia, Europe, and in different asset classes, and you can bring your money back into one place, and you can take small amounts of money and you can reinvest it, so you're getting compound growth. And you can be investing in different asset classes. You can be investing in things that move in different timing and different currencies. Every single thing that Ray Dalio has told you to do and has been doing for the wealthiest people in the world. He runs the wealthiest hedge fund, so it's $160 billion. You used to only be able to get into it if you had $100 million cash to give him. You now can't get into it. There's no way to get in, no matter how much money you've got. And what I'm excited about using technology is you and I can access it. And so what, on our platform, you used to need $100,000, then you needed $10,000. Today with WealthE Wednesday, you can literally invest from $1,000. And if you're interested in our starter pack, you can get started from $100. And Lee will put up the link to the starter pack where you can literally get started from $100. How does the model work? Well, we don't go out and find all the properties. We go out and find the partners. So as an example, in the medical space, there's a company called Allvest. They have this deal, Medical 27 in Texas. You and I get access to that deal. And then there's 4 simple steps to be able to go online and actually invest. And I'm going to show you just now on the platform. So what used to take years, maybe months, you can literally do in minutes. You don't have to worry about all the hassle and all the problems. It's now just simple and safe, and you can focus on the best returns. And what's interesting is that some of you haven't seen this slide before, but it's about collaborative investing. This is something that the wealthiest kings and queens, monarchs have been investing like this for centuries. And there's 5 principles to collaborative investing. You've got to have local partners. Now, the reason you and I couldn't do this is we couldn't afford to have partners all over the world. We couldn't afford to go and find them. We couldn't afford to pay them. Secondly, you've got to get them to invest. It's easier said than done, but are they actually investing? Third, you've got to get them to believe in the model. So rather than they win, you lose, you've got to set up a win-win relationship where you both aligned. Fourth, you've got to conduct regular meetings. We get into trouble for having too many webinars and being too open and too transparent with our WhatsApp groups. I would rather there's too much information and too much communication, and we're getting into trouble for that, than the traditional way in property, which is where people bury their head in the sand. And the fifth is that it's got to be two-way communication. So we don't want to just talk at you, we want to talk with you. And that's, you know, thank you for the people that have been putting the questions up and everything. And we're actually about to open up some Zoom rooms where you can literally join in and ask people face to face. We took collaborative investing, we chucked some technology together, we took the algorithms and the four-dimensional models that I built on top of Clem Santa's scenario planning, and we ultimately called it our GID system. And, you know, just like you've got a smartphone or a smart watch or a smart fridge, why could you not have collaborative, smart investing? And so I wanted to invite you on a journey. Now, Lee, I don't know if I should do this, and maybe I should go back before I do. Lee, I don't know, are you there?
Yep, I'm here.
So do you think that we can do a sneak preview and take what we've just learned with Ray Dalio and invite everyone that's turned up tonight to be part of creating a product which is going to be future-proof based on Ray Dalio's principles, Warren Buffett's principles, and Jim Rogers' principles? Do you think that do you think we should do that, or do you think we should keep it a secret for a while longer?
I think we should definitely invite our community. We are a community company, and I think it would add great value to them and to us to actually see what their thoughts are while we're trying to create this new product. And besides, you've let the cat out of the bag. Just go for it.
Guys, this is the thing I always get into trouble for, because I talk about things before they're ready to go. So
if you want someone to know anything, tell Scott.
So we were doing a team planning thing, and I don't have time to tell you how team charter works and everything else. But what we're talking about is that going into this quarter, so Q2, which is April, May, and June, the world is in chaos and people are looking for safety and income. People are scared and feeling fear. They're looking for safety, income, and protection, and they want to easily find a way to diversify. And I literally put up the slide there of Ray Dalio because what he speaks about is the truth in terms of what people should be doing and what they need to know. And again, that talk that I showed you was not from 3 years ago, it was from last month. And so what we started to say was, well, how could we create a product that could take the best of different sectors, the best of different countries, the best of different currencies, that could have capital protection, that could have an income, and could have growth to take advantage of this opportunity? And how could we take advantage of the stock market in terms of where the fact that stocks are down and the opportunity within the stock market? And finally, how could we look for companies and opportunities in private equity where there's tremendous growth opportunity based on where the world is going? So this is a little picture that we put together, and what I wanted to share with you is that if I go live onto the platform, and I'm logging into the platform now, and if I go through to the marketplace, just no, hang on 2 seconds. I just need to stop sharing. It's gone and done this again. Give me 2 seconds. I just need to open something up here. There it is. So we've got 2 marketplaces. we've got the property marketplace, and we've got the alternative investment marketplace. So the alternative investment marketplace is not just property, it's got other types of asset classes as well. So I'm now logging into the alternative. I was in the property marketplace, and I'm now logging into the alternative asset class. So just in my interest, I'm on the platform now. I've got three different structures, and if you look here on the left-hand side, my company, my American company, IPS, actually has no investments, and my other American company, Dream Provider, also has no investments. At the moment, that's because Lemonway and the regulations don't allow American companies or structures to be able to invest. So it's something that we're just trying to figure out, because that's where I've done the majority of my investments since the beginning of time. In terms of my own name, if I log in there, you can see I've made 7 investments, and you can actually see my portfolio. You can log in, you can go and see my total investments. You can see the different deals that I've invested in terms of where I'm at and the returns and everything else. So again, we're not talking about that tonight because that was the practical session. What I wanted to share with you was, imagine if you could come along and you could say, right, a very economically resilient sector in the UK right now, in fact, one of the most economically resilient sectors, is aged care. It's got 85% of the money is coming as your tenant is coming from the government. It's in a sector of dementia. There's a huge demand in terms of baby boomers and more people going into not only aged care, but specifically dementia. And our partners on the ground focus in this segment. And so you could literally come along and you could invest in Pineal House aged care. Now, this is actually launching tomorrow night. So there's a webinar tomorrow night, and you could go along and do that. So that would be a British investment in the country of England that would be in pounds and in a resilient sector of aged care, paying you a 10% cash on cash return. Okay, what about if you went down and you chose a medical building in America? And I'm actually not going to go all the way into it. I'm just going to have the medical building. And I actually spoke about it earlier. I like medical. I've done well in medical. I also like aged care. And now I'm in America. I'm in Texas, which is one of the strongest states in America. I'm exposed to the American economy, obviously the US dollar, and I'm in one of the most economically resilient places in the property market. So I'm in a different asset. I'm in the medical space now. I'm not in aged care. I'm in a different state. I'm in a different country. I'm in a different asset class, and I'm in a different currency. And I'm with a different partner, because I've got 2 different partners here. Okay, making sense to you so far? What about if I go along and I invest in a structured note? So one of our partners, and you can see here, there's a company called Cashbox and iDad, and they've got a thing called a structured note. Now, a structured note is how the wealthiest people invest in the stock market. You and I have not had access to this. We as retail investors have traditionally got 3 or 4% returns. Then there are wholesale investors that get sort of 5 to 8% returns. And then there are institutional investors that get anywhere from 8 to 14% returns. But the problem is that as an institutional investor, you need to be able to put down $1 million or $2 million at a pop, and you need to be able to leave it there for 6 years. And again, we will be doing a webinar on structured notes. We have done one before, but we'll do another one. And this is so exciting because, again, the wealthiest of our clients, all the wealthiest of our clients invest in structured notes. I've never been able to invest in a structured note, and I never even knew what it was until April last year. But imagine if I could put a percentage of my capital into a structured note, and I could get a 10% return in dollars and 8% return in pounds. Okay, investing in some of the biggest indices, some of the biggest companies in America, in the world, and with some of the biggest companies that people actually understand. And so this is a fixed return that you get paid out on a quarterly basis. Okay, what about if I could go and invest in a Chinese company that is a technology company, so taking into account everything that Jim Rogers said and everything that we actually showed you. And one of our partners in China is Migrate China, and they're a subsidiary, they're a separate, fully formed company in China, with the majority of the ownership actually in the Chinese local company, the way you need to have it. So our local team there have put their own cash in, and you could actually participate in a company that's helping Chinese people who love to invest in property. In fact, there's two things they love more than anything. The first is property, and the second thing is they want to be able to invest overseas. And imagine if we gave them an online solution to be able to invest in deals. So this company's been running for 3 years already, and it's just growing literally year on year. They 5x'd their growth last year, and this year they're looking to double or triple it again. So they're making quantum progress in terms of where they're looking at. And then the private equity opportunity to look at India. So another big market we're looking at is India. We're just getting started in India. There's two things the Indians love. One is property and one is gold. And the Indian market is actually, the Indian property market is in quite a bit of trouble at the moment. They're talking about 20%. The currency is in trouble. And yet there's massive growth in India. There's massive middle class growth and adoption. It's pretty much India is where China was 20 or 30 years ago. And there's a huge amount of money and capital. The most money that goes into American property and English property is Chinese. The second most is Indian. Okay, so what about having a piece of that action? And then finally, what about being part of the whole Wealth Migrate story? And if you've heard, since 2014, we've been allowing investors to invest directly into Wealth Migrate, into the platform, into the company, but the global company. And again, that's a global company based out of Hong Kong and London, dual listed out of Hong Kong and London, and it's a US dollar based company. Now, taking into account Ray Dalio's approach, and if you take all of this in, and you could go on the platform and you could invest in all these different deals, or you could come along and you could actually bring it all together in one product. And we started off by calling it our blended product, and we've done all the modeling and all the maths, and we finally decided that we believe the perfect product right now would be a mixture of medical properties in dollars in America and Texas, aged care property in pounds in England, fixed income in a mixture of USD and pounds, private equity, which is taking advantage of obviously the UK and American markets, and then private equity in Wealth Migrate at a global level with a smaller portion going into China and also a smaller portion looking at India. Now, when you do the modeling, and tonight's not about talking about that, but it would be a 5-year investment. It would be an 8% cash on cash. So it's interesting, you'd be paid a cash on cash return of 8% every quarter. The IRR would be higher than 20%. And what's really interesting, which I find fascinating, is in terms of the capital guarantee or capital protection, if any one of the 4 companies or products went bankrupt, plus the other 3 lost 20% of their value, at the end of the 5 years, you would still get $1 back for $1, which is the capital protection. And so my question I wanted to ask you, and to get your insight, was that if I open up the polls, what opportunities are you most interested in? If we were going to put 4 opportunities together with a mixture of property, fixed income, and private equity, if we start with the properties, which properties are you most interested that you would like to see in terms of being in part of a blended product? What would be the most value to you? So I can see people are voting there, and thank you very much for bringing that in. While people are voting, we've also been debating around the focus, because the idea would be that this would be a high net worth investment and an institutional investment, very much in Ken Williams' wheelhouse with his institutional banking background. And we would actually set this up. We've got a registered fund with all the global compliance already in place. We've obviously got the global digital wallet, so we can literally launch this tomorrow. It's just a product mix, and that's why I'm fascinated by people's opinions on what should be involved in the product mix. And it's interesting to see that the majority of people are saying that medical and aged care are the 2 that are the highest there, with London residential and American multifamily. Now, just by the way, this is not saying any one of them are better or worse. It's just literally talking about the different products. If you were to take the financial products, you've got fixed income, you've got a debt instrument. So that's where you've got debt against an asset, which is the first mortgage asset. You've got structured notes, which I've already spoken about. And you've also got private equity, the ability to invest directly in companies, in growth companies before they go to listing. Now, obviously, they represent arguably more risk, but also more return. And that's why being part of the blended product, you balance that risk and make sure you're getting the income return as well. So I just wanted to see what people think. If you look at it, and obviously you can see the blended investment there, which is taking them all into account. So I'm just fascinated in terms of what people think. And thank you for those that are participating. You one day can turn around and say you were part of creating a product that Ray Dalio hopefully would be very proud of. Because if you think about it, it is literally helping you, invest in about 6 different asset classes in 5 different countries, in 4 different currencies, with multiple different partners, and with many different assets that are not tied together in quality assets that move at different times. I mean, it is literally playing to Ray Dalio's playbook in terms of where that is. So I wanted to ask you a question now, and what do you think is the best name for it? Because we came out with the name blended product, and we sort of thought to ourselves, well, is that a good name or is it not? And then we chucked around a few other names, and you can see some of the logos that I've got up on the screen here. And I'll show you, actually, I can't show you now because I've already launched the poll. I'll show you some of the other names, but I mean, you've got Wealth Diversification Solution, Wealth Diversification Product, Wealth Diversification Opportunity. We've got Blended Product. We've got Wealth Diversification, blended product. So I'm really interested in what people think. What name jumps out at you? And if you're saying other, do me a favor and just type it in the chat box. I would love to know what you think resonates. I'm a big believer in life that it should say on the box what it does. And if you look at the way I've named my companies, International Property Solutions, was literally that. It helped people in international property, and we provided you with a solution. I will tell you a funny story while people are voting here. My very first name, which I don't know, Lee, if you even know this, my first company name was the One Stop House Shop. I even created a logo for it, and I thought it was brilliant until an old man one day told me that it was a terrible name. Anyway, luckily I didn't launch that company. And Wealth Migrate hopefully says what it does, et cetera, et cetera. So what should it say? And I can see that about 40% of people have voted. Please remember, you can't get this wrong, and you can vote a couple of times. And if you think you've got a better name, please let us know. It doesn't have to. No, there's not one word that it has to have in it, except for the fact that we are wanting to try and find out what people think. I meant to actually put up their blended product. I don't know why I didn't. If you like the word blended product, please just type in blended product, because it's the one that we sort of started with, and I'm just wondering whether it actually says on the box what it does. So I'll give people a few more seconds to vote in terms of where we're at. And okay, let me close out the voting there. Any more people wanting to vote? Any more names? We might be able to find some winners here. So let me just show you quickly. This is what some of the logo playing around with was: Wealth Diversification Portfolio, Wealth Diversification Solution, Wealth Diversification Product, Wealth Diversification Opportunity, and then I made this one, Wealth Diversification Blended Product. So it was the balance of them. So if you've got any ideas as to how you think we should finally name that, I think we're all ears. Maybe we should run a poll on Facebook or ask all our inner circle members or our investors, but we'd love to get your opinions, in terms of it. Hopefully you've got an idea of what we're trying to do and why we're trying to do it. So what I wanted to do now, and sorry, Lee, I see you've joined me. Often when Lee joins me, it's because I've done something wrong. So I just wanted to find out what I've done wrong. I'm joking.
No, Scott, you haven't done anything wrong. I just wanted to say thank you to everyone. Those suggestions that you've put in the chat box are really interesting, and our next meeting is going to be even more interesting when we're discussing all your suggestions. So thank you very much.
No, brilliant. And I've just put up one of the last polls that I wanted to know, that if we take that wealth diversification fund and or any other investment, so a direct investment in medical, a direct investment in, because again on the platform you can directly invest in anything, aged care or multifamily or a structured note, what sort of capital would you be wanting to invest? It always just gives us an understanding of what people are looking for. So while we're finishing up on those polls, what I would like to do, and you can see that I brought up the slide for, well, I know you can't yet because the poll's up, but David and Alex are online with us. And David and Alex, I don't know who's going to go first, but I'd love you to talk about these Zoom rooms that you're going to create now and who can actually come and join you and what you're going to do in those Zoom rooms. I'm going to be finishing up in the next 2 or 3 minutes anyway. And then, Lee and I can finish off if anyone has questions here. But if people really want to get into action mode and go and talk to someone face to face, they can obviously set up meetings later if they're tired tonight. But what we've learned and what's working really effectively now is to create Zoom rooms where people can jump off this meeting directly in the Zoom room, and it's the benefit of turning up live and being able to talk to a human being. So we've got David from China, which is a bit uncanny after everything I've spoken about China. We start to join the dots, and we've got Alex from South Africa.
Thank you, Scott. Let me go first quickly. So I'll be in room number 1, taking clients through how to set up, well, firstly, how to get to our website and how to set up an account and go take them to show them a little bit around the platform and show them the steps how to KYC their profile. And just give them a little bit of a high overview of what to expect and where to find all the documents. And we've got our link sent out to our calendars. So if you'd like to set a time with us tomorrow, we can go through the platform and show you in more detail. That's definitely available if it's a little bit late tonight. But yeah, that's pretty much me from my side. So I'll be in room number 1 because I'm the prettiest here in the company. Over to you, David.
Thanks, Alex. I'm sure we'd all agree with you. Interesting thing, I just want to say one more thing about China, Scott. The one thing that video didn't mention was that you can actually pay your friends on WeChat as well. If I wanted to send my friend 100 Rand, it'll literally go through instantly, which is quite cool. But on my Zoom room, I'm going to be running through a deal and just explaining to you how the process works, how you'd go about investing, and what you look for in a specific deal. It's a sort of an educational thing. You can ask me some questions about the fees involved or how the returns work or how the cash on cash returns work. So if you have any questions like that, just pop on that Zoom room there. And thanks a lot, everyone.
Awesome, thanks very much, David. So just to confirm, the 2 Zoom rooms are in the chat box. So if you want to just click on the chat box, we put up the chat box. The other thing is that if you want to understand the starter pack and how to get started with $100, then sorry, just quickly, which Zoom room must they go for that one?
Scott, they can come through to mine. I'll be explaining the starter pack in full detail, the inner circle, and so on.
Cool, awesome. Okay, great, thanks. So basically what we're doing now is we've shared with you the digital platform, we shared with you some of the information. If you want to book an appointment another time, you can, or you can just jump into one of the Zoom rooms. And like we said, the one will be about deals, the one will be about the setup and everything else. So my request is that if you want to go and jump in, they're going to be moving off now and going to jump into those rooms. Lee, my suggestion is I got 1 or 2 slides to finish off, and then we can run through the Q&A. But if people want to take action, they're not going to be missing anything now. I've given the meat in terms of what the 3 billionaires can teach us. And what I'm really excited about is using technology. People now have access to be able to invest just like the principles. Everything that I showed you tonight, in my opinion, you can now do yourself using technology, which I think is extremely, extremely exciting. I wanted to share just some information. In the last month, Lee organized for us to do a real estate masterclass where some of the stuff we've spoken about tonight, we went a lot deeper. It was a 3-hour masterclass. And so if people are interested in that and want all the understanding, I'm not sure, Lee, how they would get that. I know we were looking to create a way for people to get that. It is something we'll probably do again, in the future sometime, but there is a recording. How would people get that if they were interested?
We are going to be sending out a link where they will be able to get the recording from a landing page, and that we'll send it out to all our communities. We're in the final stage of just setting up that link for them. It was a paid for webinar, and so we do have to take that into account.
Okay, perfect. The chat is in the, so if you look in the go-to meeting, there's a little chat down the bottom there, and Lee's posted the two rooms, the two numbers. Just by the way, yeah, I mean, maybe I see David hasn't given the sorry, we got David's. No, I do have the two Zoom. So just to make sure the numbers are right, I just want to make sure the numbers are right. If I go back a screen, you can, oh man, come on. My computer's playing games now. So I just want to make sure the Zoom room number's right, because I actually used the ones from last night, but I don't think it is. So we got 7. No, we don't have the right Zoom numbers here. 474 and 701 502 3325. Okay, so that one's right. I will just quickly, let me just quickly change this one.
Scott, Alex was not on with us last night, which is why he's in there.
No, that's perfect. I'll just update this one quickly. So 762 081 1474. Okay. So you can literally just go on and talk about deals and stuff in that Zoom room. If you've been in Zoom before, you just put in that number and you'll be able to access it. And if you're watching the recording, obviously the Zoom rooms won't be available. But yeah, that's the benefit of coming live. Okay, let's rock and roll. I want to just finish off and give you some understanding. So to wrap up everything that we've chatted about, one of the things that we are very keen on in terms of what this webinar was about is freedom. We live in a very interesting world at the moment. A lot of people are very nervous, and I believe in freedom. And where does freedom start? Well, it starts with belief, it's knowledge, it's mindset, and that's really what we're trying to achieve for you. What's also important, and some of the things that we shared tonight, is peace of mind. It's so interesting. Although the world's changing, and although I hate not being able to get outside, I can only imagine the drama people are going through trying to run their companies if it's an old school traditional company. And we're working harder than we've ever worked. And quite frankly, if I look at it, we're probably a lot more productive because we're not traveling, we're not on airplanes, we're not at live events. There's a huge amount of time wasted. And so it's the peace of mind is amazing, knowing that you're future-proofing yourself. Are you preserving your wealth? Someone asked earlier about the rand or any currency. Are you protecting your wealth? Mike asked the question. I actually just looked. I did a big transaction in 2014, and I did it at 11 rand to the dollar. And I'm doing another big transaction now, and it's $18 rand 50 to the dollar. And although the deal is half the size of the deal I did 6 years ago, it actually costs more rands. It's amazing. And then a plan B. And the world is changing. And as Jim Rogers said, if you don't have plans for where the world's going, you're going to get into trouble. So that's what this webinar has been about. I always believe that you have to start with your why. Why do we do this? Well, we want to. Our logic is that the more people we can help, the more value we can add to others, and the more value we can add to you, the more value we can add to ourselves, and truly, I believe we can change the world one person at a time. So the question I've got for you is, what are you doing to be a global citizen? Are you ready? There's 6 things that you need: belief, knowledge, access to the investment, a system. You need support and accountability, and then you'll get the results. And so for us, you can choose. Do you want to do it on your own, or do you want to do it together? A bird flying in a flock can fly 70% further than a bird flying on its own. And so as much as the laws and the rules say that you must do it on your own, nature's laws say do it together. Deepak Chopra says, if you try to do something on your own, you've got a 50% chance of success. If you do it with a partner, you've got a 60% chance of success. And if you do it in a like-minded community, something like the inner circle, you have a higher than 70% chance of success. And it's one of the things I'm so grateful for with our wealth partners is the immeasurable growth I've had as an individual human being, learning and growing and being inspired by them, because you just go so much faster, further. And you know, Dolph DeRus taught me many years ago, if you want to go fast, go alone. If you want to go far, go together. And so that's why we created the Inner Circle, and we realized that it's not only about investment, it's about education, it's about community, and it's about purpose. We've got access to the eWealth Pack, which is our online resource with all my book, The Investor Test, and all our different resources. You know, I would highly recommend going and doing the Investor Test. I don't have the time tonight to talk about the 5 different paradigms, but it'll give you a 26-page report. You can't fail the Investor Test because every single person is on a personalized journey. And based on all the 5 paradigms, it'll tell you where you are. And then based on where you are, it'll tell you what to do next. And that's why it's a personalized path to wealth. There are the different micro degrees, be it the 8 steps to wealth, which is, you know, right from your goals through to your completion. This is the sign up to the eWealth Pack. If you're not part of the Inner Circle, if you are part of the Inner Circle, you'll get it as part of the Inner Circle. If you're not, go to that link, and it's a gift for coming along and watching this webinar for 90 minutes and giving up 90 minutes of your time. We want to give you value, and that's the value there. And Lee, if you wouldn't mind putting that link into the chat box for everybody, and in terms of where it is. And then finally, I get asked for more intermediate and advanced people, and how do you invest offshore? How do you build a global portfolio? Things like Mike said about rand devaluation and currencies, etc. And that's why we created the Wealth GPS, which is effectively 10 steps on how to build a global portfolio. And again, using my own experience, I've been helping people do it now for 16 years. And so bringing that all together, what we found was that most people want to talk to a human being, and that's what our wealth consultants are there for. They also wanted to know an easy way to start, and that's why we created the starter pack. It brings it all together, everything I've spoken about, including a $100 voucher to get started. So it's $100 that goes into your digital wallet to get you started. And the cool thing, you know, is that you can literally get started from $197. Now, yes, you're getting $100 in your wallet, so it's actually only costing you $97. What is that $97 for? Well, it's for all the education we've discussed. It's also to pay the wealth consultants to onboard you, because trust me, they make no money helping you invest $100. So we need to pay them for their time to help you get going. And then really to finish off, if you're looking at deals, you know, and cash on cash returns and diversification across countries, assets, and currencies, then literally all you got to do is go to the platform and get access to it. WealthMigrate.com for the property platform, and you can get a link to the alternative investment platform with the structured notes should you be interested. And so that is all from me. As you know, the wealth consultants are sitting in the Zoom room, so I highly recommend that you go and join. I'm going to finish off now and see if there's any quick questions that I can answer with Lee. Otherwise, I'm going to go and join them in the Zoom room. And so I don't know why that slide's coming up twice, but really that's just the links there in terms of you know, what you can do next, and some of the links, including Lee's link, because she's head of our community and done an amazing job again with Wealth. What is it? Wealthy Wednesday. Sorry, it's late. Too many webinars this week. Lee, any questions here that are relevant that I can answer or help with before I move to the Zoom room?
There weren't any questions that you haven't answered as you went along, Scott. A lot of questions came in, but you have answered them. And a lot of interesting names that we can use for our blended product. So I think our wealth consultants are going to be very busy. Yes, Shedden, the investor test is included in the eWealth pack. Well, I think it is on page 3.
Okay, so Cindy asked about becoming shareholder, so Lee's got back to her. Hopefully everyone's got the Zoom room. Awesome webinar. So yeah, if you enjoy the webinars, I hope you do. You know, we always try and make them different and add value and find things you haven't found before and find research. As you can probably realize, I quite enjoy looking and trying to find things. Can you confirm the chat box is on the WealthMigrate platform? So no, for this webinar, this is just a chat box, a go-to webinar chat box. Heidi, I mean, you've got my details if you want to just WhatsApp me and I can send you the links. Thank you, Mike, for the comments. The investor test we've answered. Love the presentation. Thanks for all the names. I think it's brilliant. Private equity, what is that? Private equity is when you invest directly in a private company. So it's what the wealthiest people do. I actually meant to put the slide in, and I apologize, I forgot. So let me see if I can find it for you quickly, and then I'm going to duck to the Zoom room.
We do have another question that has come in, Scott, and Heidi has confirmed that she's got the Zoom room. Got another question for you. Go into the Zoom. So Sue would like to know when our blended product is going to.
When we finalize what the name should be. So Sue, we're looking to launch it in the next 2 weeks. We believe that the market is ripe at the moment. We've got some great products to put into it. We've agreed with the different partners, etc. And so we're looking to put it together in the next 2 weeks. We've just got to finalize the T's and C's, all the documentation and fund particulars and everything else. It's yeah. So we're nearly there. It should be up in the near future. Right, there's one slide I'm looking for, and I'm sorry to say, but my laptop is needing, I think it's got coronavirus because it needs to go into the Neisner Lagoon. I'm just looking for this one slide that asked about private equity, and I'm sorry, I actually meant to put it in and I forgot. Sure, this thing is taking forever. Anyway, just while this is coming up, the slide I'm looking for is that when people invest, and you've heard me talk about the value chain of real estate, but there's a value chain of everything, and most people only get to invest right at the end. So if you take Facebook and Amazon, if you invested $10,000 in Amazon pre-IPO, today it'd be worth $12 million, and yet most of us, only invest once it goes to IPO, and a lot of the value is taken off the table by that point. And so what private equity is that they don't go and invest. Venture capital invests in startup companies, and they don't have any track record, etc. Whereas private equity invests in more established companies. Generally, they're already earning money, revenue. They've got a track record. They call it product market fit. And what they do. So I'm just trying to look for the slide here, which is pretty tricky when you can't see the other slides. But what they basically do is allow people the ability. That's the slide I was looking for. And private equity is where they invest higher up the growth curve. So venture capital is where you invest here at the sort of startup phase, and private equity tends to invest in there's early growth stage companies, and then there's later scale stage companies. And really, what private equity is allowing people to participate in companies that have already got existing track records. So it's moving higher up the value chain. Now, what's interesting with our blended products, and I don't quite know what we call it tonight, but if you do this on its own, it's got risk where technically the company could go to zero. It's obviously got the potential that it could be a very valuable company one day. But one of the challenges with these type of companies, if you look at Amazon, for 25 years it never paid a dividend because it just consistently invested in itself, and that's why Amazon is the most valuable company in the world today. And so what we did with the blended product, by putting it together with 2 property deals and a structured note, you actually get a blended return, a blended cash return of 8%, which is very attractive in US dollars and pounds in the current market. So that's the idea of the blended product. It also gives you capital protection in the bigger picture. So let me jump back to my slide. Sorry, I meant to put that slide actually in just to talk about private equity, which I forgot. So that is all the slides from me. I'm going to lastly check the chat box to see if there was anything else. Otherwise, I'm going to jump to the Zoom room. Thank you for everyone that's been all the amazing questions. What is the minimum you can invest? I'm not sure, to be honest. We're going to be finalizing that, but it will be higher than the once-off deals in the platform because it's going to be a higher caliber product and therefore probably be for more sophisticated investors. Nikki said the risk is pretty low, if I'm not mistaken, for the blended product. Yeah, so Nikki, there's always risk in every investment. But what we've tried to do by blending it is that you are protecting, because you're doing exactly what Ray Dalio said, which is diversifying across assets, countries, currencies, partners, and that's where the capital protection comes in. But there's never, the risk is never taken away, but it's giving people the advantage of having that diversification. Please explain a debt product. So a debt product, we've actually got a debt product on the platform. So if I go to, if I log into the platform, and, or actually, where did I have it open? I had it open already. So if I go into here, this development here is a debt product. So it's effectively called a first mortgage, where you're lending, so you're acting like the bank. You're lending money to the developer, and you're getting paid a fixed 10% return in pounds, and then you're taking security against the property. So you've got security against the asset. And so that's called debt. You don't get capital growth, but you do get a fixed income, and it's much more secure than equity, actually, because you get paid first. Like Genius Group included in blended product. So Heidi, I'm not quite sure what you mean by like Genius Group included in blended product, but yes, I mean, we've done a lot of work with the Genius Group. Obviously, I've worked with Roger for a long time. They've got a debt instrument at the moment, and as you know, they've actually done 3 launches on the Wealth Migrate platform. We've done all their capital raising on the platform for them. All returns are quoted per quarter. So Shedden, no, that's not. So all returns are quoted annually. So if you're getting a 10% annual cash on cash return, then you'll be paid quarterly 2.5% because you divide it by 4. So returns are generally quoted annually, but the returns, the income returns are paid quarterly. Oh yes, sorry, Heidi, you're right. Exactly the same as the Genius Group. It basically in private equity prior to an IPO. That's right. Yes. Okay, I'm going to duck to the Zoom room. I'm not sure, Lee, if you want me to stay. Leave the room open, or if you want to stay online, or if you're going to join us in the Zoom room. I think we've shared a huge amount of value to everyone. So Lee, thank you very much for setting this up. Really, really appreciate it. I love these evenings and sharing with everybody. And certainly from my perspective, I just want to thank everyone who's here. There's still a lot of you that are online. Been here for nearly 2 hours. You've given up your most valuable asset. My one request to you is that if you do find value in this, please go and share it with your friends and family. We're trying to add as much value as possible. The world is changing. There's a lot of fear out there, and we're trying to share with people what they could do. We're not scaremongering. We're trying to show people the facts and the fundamentals so that they can make educated and informed decisions. And really, we need your help, because we can't do it all on our own. Most people, when things change, they think it sounds too good to be true. They think it's a farce or a scam. And my attitude is, if you think it is, great, then don't invest. But come to the webinars, come and learn. They are free for a reason, so that we can reach more people. So please go out there and let people know. As I said, we've got a webinar tomorrow night. Sign up and join our communities, join the Facebook groups, etc. If you want to be in the inner circle, join the inner circle, because then you really won't miss out on anything, and you can be part of building this company together. And anyway, that's my final request: is please let's change the world together. Lee, over to you.
Thanks everyone for joining us. Scott, thank you for your time and your energy putting this together and sharing. It really was very valuable. I will stay in the room for another couple of minutes after Scott has jumped off, just in case anyone has any more questions. Otherwise, thank you very much again. We hope that you had a great WealthE Wednesday with us, and we look forward to seeing you on our upcoming webinars and within our groups. Please do reach out to anyone on us if we can assist you with anything. And yep. Thank you very much. Have a great evening and be blessed.
Thanks, Lee. Cheers. Cheers, everyone.
Hi, Dawn. So we will be posting the recording on all of our groups, and we'll also be sending it out via email tomorrow. We'll just download the recording. So yes, it will be on all our WhatsApp groups, on our Facebook pages, and also via email.
Yeah, I'm gonna leave now. I hope I don't. I'm gonna try not to shut the whole thing down. But anyway, I'm not quite sure how to do it without shutting you off. But when it says no, it says okay, end webinar. No, I'm just gonna leave webinar. Okay, cool. I'll see you later. Bye then.
Cool, no problem. We've got another question that has come through to say that is there a way that you can put small regular payments into investments? So what we are busy testing at the moment is the $100. You can get this through the Wealth Starter Pack at the moment, but we are testing whether there will be one day a month where we are able to drop all investments from $1,000 minimum to $100. We're not there yet, but we are trying. In the meantime, you can fund your wallet monthly or weekly or however you want to do it until you have the amount needed for any of the investments that you want to go in. Okay, guys, I don't see any more questions coming through, so I'm going to say goodnight and pop into one of the Zoom rooms that's happening to add value and assistance there in case anyone needs it. So thank you very much for joining us once again. Hope you all have a great evening and see you again soon.